So you know Jay Powell, the chairman, better than most. You hired him at Carlyle. You spoke to him recently at the Economic Club. What do you expect to hear from him today?
Well, he's obviously a person that's got a lot of people focusing on him. He worked at Carlyle for about 8 years, was an outstanding buyout professional. I thought that was the highest calling of mankind. He would stay there forever, but he decided that public service was more important. So he's now doing a great job, I think, as chairing the Fed. Now, that's a difficult position because nobody ever likes anybody who's increasing interest rates. So when he's had to increase interest rates, that's been a problem for some people, but I think it's been the right decision.
Do you expect that he's done increasing interest rates this year?
Well, nobody knows for certain. He said that he depends on, and the Fed depends on the economic situation and the statistics, so it depends on what the facts show. But right now, based on what he sees, it appears, though I can't really speak for him, it appears that he feels that there's a justification for a pause for a while, and I would expect that probably you wouldn't see increase in interest rates anytime in the near future.
What about
but again,
what
I cannot speak for him.
Yeah, no, I wanted to get your sense. I mean, you've got a pretty good window into all sorts of businesses at Carlyle.
We own about 200 companies, partial stakes or full stakes around the world, so it gives us a good insight. Essentially, I would say that the economy around the United States is in reasonably good shape. We don't see any signs of a recession. We've gone about 10 years without a recession. That's very unusual, but we don't see any signs of it in all the data we have in our companies. Europe is obviously slowing down. I think Brexit is a big problem for Europe, and France and Italy have some other challenges as well. So I'm not as bullish on Europe at the moment, though I think prices are relatively low and probably a good thing, a place to invest. Asia has slowed down a little bit, but I don't think it's actually going very further south from where it is. I think China probably will pick up once the trade agreement is announced, and I do think there'll be a trade agreement with China in the not-too-distant future.
David, what makes you say that last part? What specifically do you see that would lead you to be bullish on resolution of U.S.-China trade?
Well, of course, things can always go wrong, but the signs that have come out of both sides are that there's some indication there will probably be a meeting with the president and Xi Jinping at some point in the not-too-distant future, at which point they'll probably reach an agreement that will be publicly announced. Obviously, there are difficult issues to be resolved. I think enforcement is one of the most important issues that has to be resolved. If they reach an agreement, they have to figure out how to enforce it. But I do think there's a sense on both sides it would be good for both sides to get an agreement. And I think if there is an agreement in the not-too-distant future, I think that will pick up the Chinese economy. I think it'll be bullish for the U.S. economy as well.
So if we get resolution there, we've already talked a bit about stimulus in areas like China. Does the slowdown ex-U.S., does your experience tell you that we have run the risk of having that wash on our shores?
Well, the United States has recessions every 7 years or so, historically since World War II, but we've been 10 years since one. I don't know that we've repealed the business cycle, but we may have elongated it such that we may be going a couple more years before there's a real slowdown or a so-called recession. China doesn't seem to be having a recession, hasn't really had one for a quarter century or more, though they have slower growth than they had before. I do think that the news of a U.S.-China agreement will be bullish for the U.S. and Chinese economy. I think will probably help the European economy as well.
Do you think, though, David, it'll be bullish for the markets? I mean, 2019 has been off to the races on hopes of a trade resolution,
right,
on hopes of this Fed pivot. Does it feel like it has staying power to you, this rally?
Well, the markets tend to be forward indicators, and they tend to anticipate things. I think the market has anticipated there'll be an agreement in the not-too-distant future, and therefore it may be, to some extent, already built into the market. There may be a little push upward, but I don't think the news of it will push the market up so much as I think make people feel in the economy that generally things are better than they were before.
You briefly touched on valuations, and you said you saw some opportunity in Europe. Can you talk a little bit more about where you're seeing deal-making activity and potential?
Sure. Well, to begin with, the United States is still the best place to do private equity deals in the world. It's the biggest market, and it has the best financing, the best executives, best exit opportunities. Europe is very attractive as well because prices are about 20% lower for comparable assets in Europe than they are in the United States, and there's some uncertainty in Europe, and that tends to produce lower prices, and financing is pretty much readily available. Asia is also attractive as well. While it's slower growth now, I think prices have come down a bit from the peak, and therefore I think there are good buying opportunities in Asia. I think Latin America is really coming back. Brazil is now much more attractive than it was, I'd say, a year or two ago. And I think even in Africa, we see some very attractive opportunities now as well.
Speaking of opportunities, David, it's going to be a big week, maybe a big few months for initial public offerings as we get some exits of investments that have been in the works for a long time. I just wonder, of the buckets that are coming to market that have to do with structural growth, autonomy, mobility, cloud, which areas are of particular interest to you in Carlyle?
Well, we've made investments in a number of, say, growth companies, ones that are part of the newer economy. We are not an investor in, say, Uber or Lyft, which are going to go public, presumably not too distant future, or Airbnb. Those are good investments, I think, for the people that went in early. I wish I had been an early investor in them, but I chose not to do so, and I made a mistake, perhaps.
What led you to be skeptical, just out of curiosity?
Well, I generally have not been an investor in those type of companies. Carlyle has typically been more of a buyout investor. We haven't been a venture investor typically, so we really didn't pursue those opportunities when they were available to people in the early stages of the company. But as I've said before, I missed Facebook at the beginning. I kind of missed Amazon at the beginning, so I'm pretty good at missing really good technology companies at the beginning. I just don't anticipate them as well as I should. So I just don't know. You can't win them all.
That was sort of a Warren Buffett kind of admission. He said that before with Amazon. David, when you look out on the horizon at some of the risk factors, how much do you factor in political risk right now in the U.S. ahead of the 2020 election?
Well, we have political risk all the time in the United States because you never know where the government's going to go, majority Republican, majority Democratic right now. I think that generally people are prepared for a one-year long march towards an election, and I suspect that there'll be ups and downs. I don't think anybody really knows who's going to be the next president of the United States. I think many people believe that President Trump might get reelected because the economy is in reasonably good shape, and the Democrats have not yet emerged with a leader, but it's too early to predict. If you go back a year and a half before each of the last 10 presidential elections and predict who's likely to be president a year and a half in advance, you'd be wrong almost every time. So it's really a fool's errand to kind of predict right now. It's fun, but probably unrealistic to know who's going to be president. I think the business community really believes the economy is in pretty good shape, and therefore, as a result, I think the business community is not as worried about these issues as maybe others are.
But you've got to be listening to the dialogue right now. I mean, what's your sense of the sort of populist left turn that we're getting out of some of the Democratic hopefuls?
Of course, it's too early to know whether they're going to capture much of the vote. They might capture a lot of the attention. We don't know whether they'll capture a lot of the vote. But clearly, it is making some people in the Democratic Party worried that the nominee could be too far to the left, or the party could get driven to the left, and that might make it difficult to win the general election. Generally, people far to the left or far to the right don't usually win general elections, but we'll see what happens now. We clearly, if Vice President Biden gets in the race, as it looks like he will, he'll bring a moderate voice to the Democratic Party, and that might make the party move back a bit more to the middle.
Another question, David. You know, we know you're a student, a lifelong student of American political history going back to the beginnings of the Republic. I mean, when you start hearing things like, do we do away with the Electoral College? Do we add seats to the Supreme Court? Is that just part of the political silly season, the early primary season, or do you think the fundamental rules of our democracy are seriously being questioned?
Well, remember, the Electoral College was put in at the Constitutional Convention, and it's not likely to be changed because it takes both houses of Congress, 2/3 of both houses of Congress, and 3/4 of each of the states to make a constitutional amendment. So it would be unlikely that you get that kind of support. 3/4 of the states would have to vote for a constitutional amendment abolishing the Electoral College. So it's fun to talk about. When I worked on Capitol Hill for Senator Bayh, who recently passed away, he was a big advocate of direct elections, and direct elections would have given us different results in several recent presidential elections. But we have to talk about what's realistic. The Electoral College is not going to be changed because so many states that are smaller really like the Electoral College.
I mean, the other issue that we talk about here and gets a lot of buzz on Wall Street is this idea of the war on wealthy, and the fact that, you know, you have this freshman firebrand representative, AOC, and others proposing extreme taxes on the wealth. Do you think that's a positive debate we should be having, or are you worried about it?
I'm never against a debate. I think everything should be debated. To be realistic about it, people who are on the Ways and Means Committee in the House of Representatives are not talking about some of these things. And it's the Ways and Means Committee that really develops tax legislation, ultimately has to go to the full House, and then the Senate Finance Committee in the Senate. I don't see members of those committees talking about these things in a serious way. So there's always easy to talk about these kind of changes, and they should be looked at, but I don't think it's likely to happen in the near future.
Finally, David, just a few seconds left. You asked Ken Griffin about Amazon HQ. He said it really put cold water on their own plans to put some operations in New York. Were you surprised?
Yes, I interviewed him recently, and he made it very clear that he had thought he might be moving to New York, but now he looks like he's not because he was upset about the Amazon situation in New York. So I think that probably did have reverberations that were not anticipated at the time, and I wonder whether some of the people who were against Amazon would now, if they had a chance to relook at what they said, but I don't know for sure. But I do think it's an unfortunate situation for New York, because I think it would have been good for New York.